I think we are in line with what the global markets are there. Ravi Dharmashi joins us. I mean, we invited him to discuss pharma, but when we invited him, I never knew this fall would have happened. So Ravi, before we take a deep dive into pharma and why you continue to bat pharma as a theme, selling, finally the list of negatives which bulls have been ignoring looks like they are getting recognized. Do you think this market right now is offering limited upside, both based on risk and also based on valuations?
Hi Nikunj, good morning. Good morning to your viewers as well. No, clearly this first part of the rally, whether you call it a bear market rally or whether we are not very sure whether the economy has bottomed at this point or not. So some amount of back and forth, to and fro is expected. So I think the March fall was more than required. At the same time, the rally that followed it was also more than required. So hence, we'll go into some sort of consolidation. I think there is a need for us to have some sort of time correction where the volatility subsides. And once that happens, then we can say that, okay, the base has been built. And maybe by then, there is some clarity on the vaccines or the drugs that are being developed to fight COVID-19.
Right. So Ravi, now that the correction has kicked in and we don't know whether there is a second wave coming or not, or will markets react to second wave, what we don't know, let's not discuss that. But what you are essentially been making a case is that a long-term bull market in pharma has started. Your words were a long-term structural bull market has started. If I keep one or two companies aside, which is an Aurobindo Pharma or maybe in Biocon, frankly, the numbers which we've got from Cipla or Dr. Reddy or other pharma companies are not that impressive. So what gives you the conviction that a long-term earning-driven bull market in pharma has started?
Right. So as we discussed the last time around, let me just provide you with a context. Essentially, this rally as of today is one of under ownership and underperformance getting corrected with some change in fundamentals for the better at the margin. So it's not like we have started, we're going to deliver 15-20% growth. It is more of what was expected to be a minus 5% growth will possibly be a plus positive growth here. So US growth, if you single out the US growth for most of the companies, that number is actually not bad. Now, a lot of these companies were almost factoring in, market was only giving valuation to the domestic stories. There was no valuations being given to the US story. Now, suddenly, with US market, US generic market stabilizing, there is some amount of value being given to the US business as well. So, as I said, at this juncture, it is still a correction of under ownership and undervaluation. That I think has played out to a large extent. And going forward, I think we'll need to get more selective and we need to focus more on which companies are managing to deliver.
So are you making a case, Ravi, that unlike the previous pharma rally, where everything went higher, it was like a rising tide phenomenon, and any company which had a prefix or a suffix pharma, that went higher. But this time it's going to be a select few. I mean, are you making a case that in 2000 when the TMT boom started, every website, every .com company went higher, but after the crash only 2 dozen survived and only one became Amazon? Are we in for that kind of a rally in pharma where 10, 15, at max 20 stocks will rally?
No, I wouldn't compare it to .com. I think pharma is very, very different in that sense from .com. There is in fact, within pharma also, there is a lot of heterogeneity. They are not really homogeneous. Somebody is focusing on inhalers, somebody is focusing on biosimilars, somebody is focusing on injectables. So various companies have various focus. So it is very difficult to say that everything will go up together. That's what I'm saying. This initial part of the rally was all together, which was based on under ownership and under valuation of the sector. That bit has played out. Going forward, it will more be a which player is focused on which segment and how is that particular segment behaving.
Sure. Ravi, the only thing here is that most of these stocks have run up ahead of the fundamentals, as typically always the case is with markets. And most of these stocks are already quoting at their long-term averages. Would you say that to make big money from here on in pharma, you have to stay put for the long haul?
Yes, I think when you compare it with the rest of the market, other stocks, you can say, the fundamentals are far worse. In pharma, actually, the fundamentals are not that bad. So even if this correction was to get deeper, I believe pharma will, the correction will be far shallower. It will be more like a consolidation. And we will build on these gains selectively, stock specifically, depending on what events pan out, depending on what kind of approvals the companies get. So, we were having 8 to 10% kind of price disinflation in US generics. US generics, for 5 years in a row, the industry was contracting. FY20 is the first year where there was a flat growth, and 21 will be the first year where we will see maybe 5% kind of a growth. But within that, if you go, oral solids actually, which were the main pain point, have actually now started going up in prices. The amount of drug shortages are going up, and within that drug shortages, the oral solids are having a bigger and bigger chunk. So any company with a broad oral solids portfolio at this point of time is going to benefit, because instead of the minus 5 to 7% kind of a price disinflation, you might actually end up with only minus 3 to 5% for the old portfolio, and for new portfolio there might actually even be a price increase. So the oral solid story is bouncing back. US generic markets have stabilized, which is going to grow. The companies' balance sheets were already in decent shape. Now the P&L is also improving. So I believe pharma companies will digest most of the gains very well. And after some amount of consolidation, as new triggers pan out, we will have a continuation of rally.
Ravi, if just analyzing as to who could be the COVID hero amongst pharmaceuticals, and if I largely, track out that list of who is actually building vaccines, it's largely the unlisted players. Within the listed gamut, do you think there is a COVID opportunity within pharma?
So Aisha, unfortunately, COVID is nothing but a hype from earnings point of view. It is not going to make a significant, meaningful dent to any of the companies, whether it is HCQS or vaccine, except maybe for Serum Institute, which is not in the listed space. So I think we should ignore that hype. We should focus on their core business and how it is panning out. If anything, COVID can open new doors and new windows for opportunity in the existing portfolio, and that is a welcome thing. But I don't think finding a cure or a vaccine for COVID is the really the path or the one criteria that we want to depend on while picking the stocks.
Ravi, you've been confident on the pharma story. How much of your overall portfolio would you say is wise to put into pharma at the moment, and what else would you then be looking at to complement that?
So we run a very concentrated portfolio, and obviously we've been holding a very high weightage. So our weightages are close to 30% in the pharma sector, and we will continue to hold that. Besides pharma, obviously we are holding some amount of weightage in chemicals, in some consumer stories which are not that impacted, and financials, our weightage is too low. We have only one bet, so to say, and we continue to. We have not made wholesale changes to the portfolio, but yes, we have increased weightage in the pharma in the last couple of months.
Okay. And, within pharma, as you said, it's a heterogeneous sector. Do you feel that you're even more confident or bullish on the names that perhaps are going to be led by US market growth? Is that where the opportunity is? Or would you see an equal leaning towards the domestic market?
No, I think domestic market is definitely a very good story, and it is well recognized. And the stocks are also priced accordingly. The recent rally or the more delta was for sure in the US generics market. And hence, our incremental weightage has gone towards US generic story. But having said that, we remain equally confident on the domestic story. There is near-term headwind because of COVID-19. The volumes have dropped off, but I think that it's a more temporary damage. Again, these stocks are not going to witness a large-scale correction or a huge dip, and one should be looking to buy even in the domestic stories in a dip.
Is that you like pharma irrespective of whether it is the COVID tailwind or whether it is world's interest towards healthcare which will increase. You like pharma independently of what the current medical crisis is. So my question is that why pharma stocks have suddenly started moving up after the March sell-off?
Right. So going back again, Nikunj, you have to look at the history. Since 2015, pharma was in a bear market. For 5 years, we have had revenue decline, margin erosion, profit degrowth, bad acquisitions, and we have had US FDA regulatory issues. All those factors combined led to the entire market cap of pharma sector declining from about 10 lakh crores to just below 4 lakh crores. So we had like a 60% kind of a correction in the pharma market cap. Now, some of those negatives that had developed started receding. So there was price disinflation, which was ranging as much as 8-10%. There was high product concentration and dependence on few products for profits. With 5 years price erosion, that concentration reduced. The number of ANDA approvals, the intensity is decreasing since last 2 years. The number of ANDA withdrawals is also increasing in the market. So what the demand supply balance, which had shifted in favor of the channel, the distributor, because of the consolidation at their end, actually is now correcting itself. The pendulum had swung a lot in their favor. Now the buying power is coming, the bargaining power is coming back in the favor of manufacturers as the particular drug which were probably supplied by 6-8 companies are now coming down to 3 to 4 or 5. So this is leading to some amount of pricing increase, some amount of drug shortages, and that is why the basis of this pharma rally is essentially this and not the COVID. What COVID has actually done is it has ensured that for the next 1-2 years, it doesn't look like there will be incremental US FDA regulatory issues. What plants that are already under issue, yes, they are likely to take some time for resolution. But we have had in the last 2 months happy coincidence that we had lots of approvals and lots of facilities getting cleared. And at the same time, there will be no new facility which will be undergoing inspection for the next 1.5 years. In that kind of a scenario, it gives them a good run. Whoever has a existing broad portfolio of oral solids, the pricing is increasing. There is unlikely to be any further regulatory trouble. Whatever is there is already known. So that is the main reason for the bullishness in pharma and not COVID per se.
Okay. Ravi, I'll take the clock back and really back. If somebody made a basket of the top 3-4 private banks, let's say 8-10 years ago, you've done reasonably well. Whether you bought HDFC or ICICI Bank or a combination of IndusInd Bank and Kotak Bank, you've done reasonably well till about a couple of months ago. Which means if you took a good sectoral bet, it really proved very well. It did very well for you. Would you advise the same at this juncture, that buy the top 4 pharma names, have little bit of allocation to all, and a combination of Sun Pharma, Dr. Reddy, Aurobindo Pharma and Cipla, that could be a potent combination to own. Now, yes, you're an individual stock picker, so you may like 1 out of 3 or 2 out of the 4 names I mentioned. But for somebody who's, let's say, in for a long haul, likes to buy stocks, can a combination of the top 4 pharma names work very well?
No, so having a basket approach to pharma is advisable, but it is not going to be a homogeneous thing like private banks. You will have to select, maybe you want to select one biosimilar play, you want to select one oral solids play, and maybe you want to select one smaller guy with a niche specialty complex pipeline where you can actually hit a jackpot. So instead of choosing it based on large companies or any such thing, you might want to go one level deeper and understand which particular opportunity are these companies addressing. So I believe the profit pools that are really going to be sticky and consequently they'll be difficult to break into as well are inhalers, biosimilars, complex generics, and other small molecules. So these are you want to figure out which are the companies that have the best pipeline, are ahead in the game in terms of addressing these opportunities, and you want to buy and stick with them. So even though the price movement at this point of time is homogeneous, everything moves up together and move down together. But I think the opportunity they are addressing is very different, and you can actually make a nice portfolio which complements. So you can add a domestic name to that as well. So you want to pick one domestic name, one inhaler opportunity, one biosimilar, and one small molecule. That would be a good combination of companies that. And the new emerging story is, of course, the shifting of manufacturing base from China in API to India. So maybe you want to add a API play as well to that group of companies. So yeah, it is very difficult to know one particular winner in pharma space. So having a basket approach will help, but selection of the stocks in that basket is slightly different from just pooling all private banks together.
Right. Ravi, where does healthcare lie as a piece of the pie within the pharma ancillary space, if I can call it that? We all know that all non-COVID-led treatments have taken a backseat for the last 3 to 4 months. But if, the COVID experience has taught us anything, is that healthcare has to be upped and the government will pour more and more investments into the healthcare sector. As limited as the listed space within healthcare may be, do you think there is an opportunity there as well?
No doubt, there is a big runway ahead of us in terms of healthcare penetration. And one of the biggest trigger for this sector is going to be insurance penetration. So you might actually want to play the healthcare penetration opportunity through through an insurance player for all you know. So because the business model on the healthcare side, especially the hospitals, are very capital intensive, and in scenario like today, it is very difficult for them to make money or break even when none of your other. So the 3 profit pools for hospitals are medicines, diagnostics, and ICU. So I feel without these 3 functioning to their full capacity, it is difficult for the hospital companies to make money. On the healthcare side, the diagnostics chain, I feel, yes, they are valued for the long runway, but I think still between 10 and 15% kind of a long-term growth is very, very doable. And if that happens, then these stocks can be a compounder even from there. So diagnostics is definitely a space which excites us because the balance sheets are clean and it's a free cash flow throwing business. And we should have a piece of the domestic healthcare in terms of diagnostics. Hospitals are a little capital intensive. But having said that, to your point, healthcare in India is going to grow over the next 10 years and there will be winners from here as well.
Great to have you, Ravi, today on the show. We'll let you go on that note and some great